Hey, folks, welcome to InTheMoneyStocks.com's weekend technical analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. This video is for January 22nd through January 25th, 2013. And again, remember, markets are closed on Monday, Martin Luther King Day. Now, this is the chart of the SPY on an intraday basis, looking at each day. And again, you can see Monday, Tuesday, Wednesday, Thursday, Friday of last week. And again, if you go back to last week's free video I did on the weekend, this week was precisely what I gave as analysis and predicted. So we saw a market that slowly has floated higher. I talked about how the money flow is coming in from the retail investor. That's going to be enough in this light volume environment to keep the markets neutral to positive, and that's exactly what happened last week. I project out that I think that should continue into this week, although it's going to start to get a little bit choppier. All right, you closed above the 52-week highs on the spiders and the S&P here on Friday. But at the same time, there's no confirmation. Confirmation is a proprietary technical signal based off of what we've come up with here at InTheMoneyStocks.com. So again, look for neutral to positive bias next week, but it's not as no-brainer as last week was. You're going to start to get into a little bit of iffiness, partially because of earnings. All right, you have Apple earnings next week, IBM, a bunch of these other big players are going to be reporting. Some of them will be good reports, some of them will be poor reports. That'll keep the market on edge a little bit. In addition, one thing that was accomplished on last Friday was a kicking the can down the road event for the debt ceiling. The Republicans basically said we will help vote through the debt ceiling increase for President Obama. Essentially, they don't want the bad rap, and I think that's really the change in the Republican Party here. They're basically laying down. They're saying, hey, listen, we can't be blamed for a bad economy in the future. We have to go with what the Democrats want, and therefore, all right, let's do it. Now, they have said that we need some spending cuts and so forth, but for the most part, it's kicking the can down the road 3 more months. They're going to let the debt ceiling go up for 3 more months. That'll take us into summer. All right. Now, initially, that's partially why we inched up a little bit on Friday, but for the most part, I think that's mostly factored in at this point. The markets are short-term, very, very extended, and again, that's why I'm saying you probably do continue to float up a little bit more. But if you look back on the charts, I mean, we've had a tremendous rally just over the last 2 months, really. 2 months ago, we were down at 135. You're now at 148. That's a 10% rally, essentially, in the markets in the last 2 months. So again, just on an overbought basis, you're getting towards the end of this. Projections are as follows. I'm still seeing a market that's going to inch up a little bit more, but get a little bit more choppy now. And again, if you look at the VIX is at very low levels, which tells us there's a lot of complacency out there, which again tells me that you're going to get a little bit more choppy. I still think the market floats up for another week or two, and then once we get to about the 150-ish level on the spiders, maybe as high as 152, but right around there, another 2 to 3% higher on this market, that's when I think we top out in the short term and start to see a good pullback. Okay? So again, with that, what we're basically looking at is selecting areas for longs and shorts on swing trades inside the Research Center. And by the way, so you all know, the Research Center is the service we offer here at InTheMoneyStocks.com for swing traders and investors. There's a 7-day free trial. We teach you proprietary techniques there as well. And again, this is the proprietary PPT strategies that we have come up with that yields an 80 to 90% success rate. All right, 80 to 90%, guys. There's no hedge funds doing that. There's no big players out there doing that type of return on successful trades one after the other. All right, let's go to the daily chart. Here you can see on the daily chart that we did close above the former 52-week high. If I take the high going back to the 14th of September, draw it across, you can see on Friday we closed above. We did not confirm, though. I want to make that clear, folks. So based on lack of confirmation, it leads a little bit of a murky play for next week, although I do think overall, while you're going to get a little choppier, as I said, I still think you float a little bit higher still into the 150 area on the spiders, maybe even 152 over the next 2 weeks leading into the end of January. Once we're into February, then I think you get a little bit more downside coming back in, and the markets get a little skittish as some of the good economic data is going to wind off and subside. All right. Where would the next levels be on a technical basis if we zoom out? Actually, I won't zoom out. What I'll do is I'll just go back in time so you guys can see this. Let's go back here. We have to go all the way back to 2008. This is crazy because we have to go back so far. Actually, yeah, 2008, 2007 to get back to these levels. And these are your current levels. So this is your current level where we are. We just breached this double top right here. There's a little bit of a pivot right here, right around the 150 level. That's what I'm seeing right now. And then if we get through that, you're looking at 152. All right. And again, just so you guys know, if we continue, these are your next levels. I'll just give them to you right now. 154.75 to 80 right here, and then obviously the double top right around 157, which is the all-time high on the spiders. And again, amazing if we were to get up there. And in all fairness, after a pullback off 150, 152, it actually is very possible that we do later this year. Do I think there's another bubble brewing here in the markets, in the equity markets? Yes, I do. It worries me that you're seeing so many of the average investors piling in the market at these highs, considering just to get back to the all-time highs, it's only about another 5% move higher. They're really late to the party. All right, I don't see the markets going up to the 52-week high short term, or I should say all-time high short term. And even if we do go up there, it's only 5%. So you're betting on 5% max to an all-time double top, at least the retail investor is, as opposed to a possible 10%, 20% decline if something goes wrong. And I think that's a very poor investment decision by the retail investor. However, that's what the retail investor does. The retail investor buys at the highs and unfortunately sells at the lows. So it is what it is. Unfortunately, history repeats itself in that way. I just wish I could teach them all the PPT methodology so they could avoid that. But that's what we have here on the charts. And again, just seeing here, look at this move from here all the way up. That's a pretty impressive move. And again, continuing into January, double top has been pierced. Now we'll see again what happens early next week. Taking a look at some other stocks out there, let's go into some key ones here. JP Morgan continues to advance higher, really a tremendous upswing. If you look at JP Morgan where it was in June, July, right here around 30, 31, it's had an amazing run. That's a 50% move up. Now remember, this fall initially on JPM was because of that big whale trade that where they lost like $6 billion. So I mean that unfortunately took the stock down tremendously. Once that passed its ancient history now, they've been able to come back beautifully. And you've actually just taken out the high and kind of stalled right around the double top 52-week high. If you go back, this is what I'm looking for on JPM. I do think JPM gets up here to a double top somewhere between this level and this level, which is the 47.80 to about 48.35 level. There's about a 50-cent range there. That should be where JPM heads. So there is a little bit more upside, and you're seeing it here in JPM as a possibility. Goldman Sachs, take a look at Goldman Sachs. Goldman Sachs has blown through the 2012 highs, but now you're aiming for these pivots, and there's a big gap fill right here at 160, a gap window at 157.5, pivot high. I mean, there's a lot of levels coming up, but you still have room on Goldman. In all fairness, there's still plenty of room on Goldman Sachs. It should, in all fairness, pull back a little first, but I think eventually, I actually do think it gets towards these highs, guys. I think there's a definite chance at least it fills the gap to 160, which is only about 15 bucks away. Goldman's been gaining about $3 a day, so in theory, it could go there in a couple weeks, no problem. Okay, Apple. Apple's the big one. Apple reports earnings. First day back is Tuesday this coming week. After the bell, Apple will report. Now, the sketchy thing about Apple, I want to talk a little bit about this because it warrants, for those of you that are kind of, in that group of novices or beginners or people that are trying to learn the market, which is a majority of people, you need to understand this. All right, if you see where Apple closed on Friday, it closed at $500 on the mark, dead on. All right, right on there. Now, why did it close there? I mean, how did I call this as an exact close a week ago? How did I know Apple on Friday would close at $500? Well, it's simply options expiration. And what you need to know is options are a rigged game when it comes into options expiration. All right? Essentially, the institutions are the ones that sell the options to you. They're the ones that sell a majority of puts and calls. They just have them out there. They're making a premium. Remember, when you buy an option, you're paying a premium on that option to own it. All right? So the institution is selling you that option. If the option expires worthless, they make all of the profit, all that premium as pure profit. So the institutions with their billions of dollars have incentive to push stocks to even levels where they maximize their profit. And institutions, what they do is they'll sit down. They have computers that do this, but they'll calculate where do we need to close Apple, for instance. And Apple, in all fairness, is one of the highly option played stocks, and I'll discuss that in a second. But they say to themselves, well, where do we need to close Apple to maximize our profit? If we're making $10 per option, we want to have that as full profit. And again, they're selling hundreds of thousands of these, so it's millions of dollars to them. And they discover that it's a certain level. And it's not surprising that 500 would be that level where people were buying calls for hoping for a move above 500 and puts for a hopeful fall below 500. That was the maximum profit level for them. So what they're doing with their billions of dollars is pushing the stock to close right there on Friday so they can maximize it and gain all that as pure profit. Remember, no one with options at a strike price on puts or calls above or below 500 made any money here. They all lost. It was all expired worthless. And the institutions are pocketing that money as profit. I mean, honestly, it's kind of like a scam, but it's weirdly an accepted scam in this market. I don't know why the SEC doesn't kind of look into this kind of nonsense, but that's just the way it is. Bottom line is, what you have to remember, the average investor, why Apple? Why not XYZ or any of these other stocks out there that are smaller? Well, the average investor can't afford generally to buy 100 shares of Apple or 1,000 shares of Apple or 5,000 shares of Apple, right? I mean, Apple's a $500 stock. I mean, even 100 shares is a lot of money to the average investor. Therefore, they're playing options, which is exactly why it's one of the most highly optioned plays. Therefore, the institutions are going to utilize this stock precisely to maximize their profit because they're taking all that money from the average investor who didn't buy the stock specifically, instead played options on it. All right, I hope that makes sense to a lot of people. And again, it's no coincidence that Monday, Tuesday of last week, I said to my investors, my swing traders in the research center and in the intraday stock chat, I said, hey guys, Apple's going to close at $500. That's just where they're going to push it. I can see the writing on the wall far ahead of time. Sure enough, to the penny, $500. I'm no genius, folks. All right, it's not like I have a crystal ball telling me the future. I have the PPT proprietary methodology, 80 to 90% success rate, but this was just knowing how the institutions play games. If you look at key stocks, every options X, they always close around a master level. They always close around a key level, okay? And especially the ones that are most highly played by average investors, which would happen to be Apple, obviously, based on its price and the craziness that it's shown us. The big question is, where will it go next week? And that's going to be the big one. Earnings will determine that. I think you'll probably get a flattish, choppy day on on Tuesday ahead of earnings, and then once earnings come out, it's anyone's guess. What I'll do is I'll analyze the chart after earnings when the stock is moving wherever it's going, and we'll find out if there's a trade on it after that. All right, again, if you want swing trades, if you want proprietary technical analysis strategies to utilize with an 80 to 90% success rate, the Research Center is the place you should go. All right, 7-day free trial. Can't go wrong. It's a 7-day free trial. All right. What else? Let's take a look at Google. Google fell back a little bit. I think Google's seeing some selling into earnings as well, because remember last earnings, they by accident released earnings early and the stock plummeted like $50, $75, $100. So I think you're probably seeing a little bit of that. That could bode well for earnings since it's factoring in negative earnings already. You're seeing some selling. Maybe earnings pop the stock actually on earnings. And again, 50 MA support here. You have a little bit of a pivot area right there. If it gets through, this is your next spot. And following that, you'll see the 200 moving average. So those are your levels on Google. All right, IBM, I continue to follow the trend channel on IBM here. Interesting channel. If you just connect these lows, look at this. Connect all these lows, that's a major trend line. If that ever breaks, this thing goes down very, very fast. Earnings will be coming out, I believe, on Tuesday as well for IBM. There's a lot of earnings next week, folks. I mean, unbelievably a lot of earnings, so be ready for that. We talked about JPM, Goldman Sachs, Apple, Google. Baidu's had a nice move on Friday, but continues to pull off those highs, those recent great move highs. And Chevron and Exxon. I mean, Chevron's getting ridiculously extended here. Had a nice topping tail on Thursday, and then because the market floated up a little bit as well. Nice topping tail, though, I have to say. And it came right at gap window right here as well. So if it gets through, this is going to be a great level up here of resistance, and that's at gap fill at 117.35 or so. All right, guys, just a reminder, it's all about PPT, price, pattern, and time, proprietary strategies. All right, again, this is what has made us profit the way we have profited. Our members learn this, and then they profit. We give out swing trade alerts, calls, long, short, whatever it is. We also teach this. You can learn it. We're not trying to hold it back like institutions keep all these black box trading programs private. We're more than happy to teach everyone that commits to learning it. You know, if you have an open mind, you want to learn this stuff, we're going to teach it to you. You can profit 80 to 90% going forward for the rest of your life. Trade in your old age when you're 100 by clicking a button, making thousands a day. It's that simple. All right, come to InTheMoneyStocks.com, join the pros, learn the proprietary strategies, and make money for the rest of your life. Take care, guys.